So you're interested in day trading. You want to learn different trading strategies and techniques. You want precision entry and exit points. You want more out of life? Sound like a fucking infomercial. Well, I'm about to break it all down for you. Let's get into it. What's up, everybody? I'm Jonathan from LoneWolfDayTrading, and today I'm going to be breaking down the strategies, patterns, and techniques I use when I trade. If you haven't seen my previous video of my P&L, profit and losses for the month of September, check it out. I put the link in the description. Also, stay tuned to the end of the video, and I have a special bonus for beginning traders. So when I first started day trading, I had no idea what I was doing. I was part of a chat room. The guys would join in. They say, hey, you look for this stock, look at this stock. You should enter here, you should exit here. I had no idea what was going on. Where are the guys finding these stocks to trade? Where are they finding these entry and exit points? I mean, it was all calculus to me. Or in my case, it was just basic algebra. I didn't know what the hell was going on. I just wanted to break away and have the ability to not have to rely on other people. And hence comes the name of Lone Wolf. Just a reminder, this is what I do. This isn't going to be ideal for everyone. Everyone has their own preferences when it comes to trading in the market. As long as you're comfortable and you're green, that's what truly matters. So how do I start my mornings? Well, I go to the stockmarketwatch.com. Here at the top, I click on pre-market. I scroll all the way to the bottom, and here I'm going to find the top gaining and top losing stocks within the pre-market. Now, this is just based off the percentages. Primarily what I'm looking for is, actually, I'll just start from the left. I'll move my way over to the right. Of course, we see the change. This is just from the time that it closed previous day to where it's at now in the pre-market. Of course, we have the last price, we have the symbol for the stock, and then we have the volume. Typically, what I'm looking for is something that's between 250,000 to 300,000 based on the time that I'm looking at within the pre-market. Most important is you want a stock that's about 450 to 500,000 before you're actually trading it. This is going to alleviate any type of choppiness. It's just going to ensure that it's a very smooth trade. So when I look at this, I'm looking for stocks that are between 3% to 15% down in the pre-market. Now for myself, because I do short, I'm looking at the downside. I could also look at the upside to see if there's something that's 3 to 15, or even stocks that are up 100, 150%. Those are always, I will say always, going to have a pullback within the first 5 minutes of open. Reason being, it's closing the gap from the pre-market. And as we get a little further into the video, I'm going to show you how I use the previous low of day to actually figure out where my entry point is going to be when I actually do short stocks. Now, the reason I say 3 to 15%, anything that's under 3% normally isn't popping up on anyone's stock alert software. If it's under 3%, people aren't really going to see it, and you want other people to join in when you're going to trade. When you trade, if you short something or even if you buy and other people jump in, then there's a greater chance that it's going to go in the direction that you want and you're going to make a large amount of profit. Above 15%, there's always, more than likely there's going to be a pullback at open or close to open. Again, this is because it's closing that gap from the pre-market. So I just pulled up my broker, and what I have here is SQ. This was actually from yesterday. I did trade this and made a good amount on it. It wasn't a home run or anything like that. But I love the technical analysis on this. This is exactly what I look for when I'm shorting a stock. Also within this, I'm going to show you different patterns and formations that I'm looking for consistently when I'm trading. I don't look at something as a whole. I actually watch for it to start forming. If it's forming a bear flag, a bull flag, a cup and handle, a support line, a resistance line, and something that a lot of people have never heard of or don't even use, which would be called a false break. So before we actually look at the different patterns, I actually want to focus on this candle right here. The reason being is it's very important and imperative to understand the different manifestations of the Japanese candlestick. I mean, we see this here, this one looks completely different, this one looks slightly different. So what does this exactly mean? Well, what this means is the entire body of the candle is going to be the high and the low within that 1 minute period. This is the 1 minute chart. Granted, we could go to 5 minute charts, we can go to 30-minute charts, but it doesn't change the understanding of the candlestick. Now, the body of it If it's a green candle, the bottom of the body is going to be the opening price, and the top of the body is going to be the closing price. So what time or what amount that it closed at before it moved on to the next candle. It's very important to understand that, especially when you get into what I do is shorting. I'm always looking for a wicking candle. Wicking candle means that it was green, but there is a lot of downward momentum that you can tell that shorters are jumping in, sellers are jumping in. Even if it would have broken a new high, if you get that wicking candle, that means that the break was very weak, and we'll cover that as well. So people ask me, okay, your trading technique is a little weird. I've never seen it before. How do you do it? I mean, it doesn't make sense. It's not really something that you see a lot of the time. I mean, you may see it a little bit, but how do you know when you should enter or when you should just forget about the trade completely? Now, as we look deeper into this, I normally don't trade the first 5 to 10 minutes of market. Sometimes I do if there's a crazy spike and I just know it's very overextended and there has to be a pullback. There will always be a pullback. It doesn't matter if it's a 5-cent pullback or it's a $30 pullback. There's always going to be a pullback when there's any type of outrageous spike. So when I was looking at this trade, I see right in this candle, it makes the high of day. So we have the high of day right here at the top of this candle. Immediately after that, it breaks down in the next candle and it forms the low of day that we have right here. The next thing I'm looking for is for it to break a new high. Now I could have shorted it thinking, hey, it's gonna go lower from this low. Now the reason I didn't is because there's one key thing that I look at that a lot of people don't look at, or really don't have a reason to. Why would you? Is I look at the previous day's low. I have a low of 76.90 if we look at the left side of the screen over here. 76.90. That's where it closed at during the trading day, and again, that's the previous low. So what I'm looking for is this stock to close the gap. It started down, about $4. Now, granted, this is just showing what happened today. This is from yesterday, but it started down about $4, and I could have shorted it around here at 71.50, but I knew there was going to be a pullback. The stock wants to close that gap. A lot of people ask, why is the first 5 minutes, especially the first candle of the stock market, why is it so crazy and volatile? I don't understand. Well, the reason being is people that are buying it, we have people that have bought this stock yesterday. They may have bought it up here. They see it's down here and they're saying, hey, this is a perfect deal. I can, I bought it up here, but hey, I can buy it down here and average my loss out. And then when it spikes up again, I'm going to make a lot of money. And the downside with that, mindset is it may never go back up. It may just keep on drifting down. I mean, you think of the people that bought TLRY at $300 about 2 weeks ago. It was at $300, and like the next 30 minutes, it was at $1.50 or $150. So they could buy it at $150 and average it out, and hopefully it goes back up, but you never know. Another buying that you're getting is people see that it's down on the day and they're wanting to buy it because they feel like, hey, it's down so much on the day, it's going to go back up. It's already down so much. And that's possibly not the wrong mentality. That's just not what I do. That may work for some people, but again, it's what you feel most comfortable with in the market and ultimately what's going to make you green. So looking a little closer here, we see it came up. Right here, we can see the high here is 73.80. Now, the previous high was 73.76. That means that this candle here broke a new high of day. And immediately after that, this candle broke a high of day. There was 2 candles that broke a high of day back to back. And if we look at the whole movement right here, from here to here, I mean, that's almost $3. $3 within 4 minutes. That's very overextended, and that's what I was looking for. Now, what's important to see is that next candle going to break a high. Well, we look at it, and no, the high is 74.31 right here. It was close to it at 74.38, but it didn't. And because it failed, we see that it went down. Now, this is the area that I shorted it. I shorted at 73.55, so around this area somewhere. And the reason I did that is because it was breaking the moving average. So I saw it break the moving average, and we see a support that's formed right here. Now for over here, we see that it broke that support line. Now why are support lines so important? Is, you know, people say, okay, look for the support lines, look for the resistance lines. Why does that matter? Well, the thing is there's so much pressure that's built under that support line. For people that are selling, people that are shorting like myself, what I'm looking for is I want the stock to break that support line, because normally a cent under that support line, we have people that bought the stock that are going to sell it. They're looking for their loss to win, or their risk to reward ratio. So they're saying, okay, we have the support line's around $73. So if I buy in here at 73.10, I'm only risking 10 cents, and this could pop up to a new high. So what's 10 cents to me? I'll just put in a stop order at $72.99. Also, what we have is people that are shorting it, they're going to short it a cent under that $73. So at $72.99 again. So we have selling from the buyers and we have selling from the shorters. And all that pressure is going to create this candle right here. The movement for this one was about 75 cents. So that's another thing that you're looking for. Now, one thing that I said that we would be looking at that a lot of people don't discuss is false breaks. So what exactly is a false break? I've never heard of that. Is that a good thing? Is that a bad thing? A false break is very important. I'll show you right here. So if we move a little closer into the stock, let me zoom it in a little bit. We see that these two candles right here are right at the $0.50, 71.50. This one is a low of 71.50. This one is a low of 71.50. Shorters are looking at, buyers are looking at that for it to be a support. Now this next candle, we have a low of 71.41. That means that this candle broke a new low. It made a new low, but it wasn't successful. As soon as it broke it, it was squeezed right back up. And we can tell by the body of this candle that the low is here, the high is up here, and the opening price was right here and the closing price was right here. So whenever you do run into a false break, it's normally a good indication that you need to rethink the trade. Now sometimes it does a false break and the next candle will break through, but normally when everyone's looking at that one spot, normally a $0.50 or a whole dollar that they want to short it, and it breaks, but it only breaks like 5 cents and it just reverses, more than likely they're going to lose out on their money. So Jonathan, what are some other patterns I should be looking for? Support and resistance lines. Well, we have one right here. Let's look at these two candles. If we look at this candle, the high of this was 74.10, right? Right beside it, 74.10. They're both at 74.10. The way I view it is the bulls got together. They said, hey, let's get this thing up here. So all the way from $72 to 74.10, they pushed all the way. The next candle, all the way to 74.10, but they weren't able to break that 74.10. And when that happened, the bulls were just getting out. They said, okay, I'm just taking profit. It's not breaking. Forget it. Let's get the hell out. We'll regroup later. And that's when the consolidation will come in. So when they get the 74.10, it doesn't break. They say, fuck it, I'm out of here. And it just breaks down. We see it hit the Vwap right here, went up, hit the moving average, and just went right through it. So let's come back to the different indicators that are stated within a typical chart. Now you can customize these however you want. Now for myself, I have the one moving average, which is the blue line, and then I have the Vwap, which is the red line. A lot of people, they use multiple moving averages, they use Vwaps, they just use a bunch of crazy shit, and then their chart just looks like a connected dots graph or whatever. It's insane. You don't need all that shit. It's just going to get in the way of what really matters. And some people are like, I can do whatever I want, and that's fine. As long as you're green, as long as you're green and you're comfortable, then I'm happy. So the Vwap is an imaginary line that's mostly indicating what the price should be off of past prices of this one stock. So we see, we're going along, it touches the Vwap, it goes down under the Vwap, it comes back up. Stocks are always going to be weaving in and out of the Vwap. And that's why that Vwap is sometimes a support line, and sometimes a resistance line. Also, when it comes to people that trade for corporations and stuff like that, they're also looking at the VWAP. Some of them have the ability to buy like when it's above the VWAP, and they can't when it's below the VWAP. So VWAP is very important. All right, so here it is, the special bonus material that I said at the beginning of this video for beginning traders, and also anyone else that really wants to get into a broker. You don't have to be a beginner. You can also have some type of prior experience, or maybe you want to switch over. However, in the description, I placed a link to a 5-day challenge. Now, I use Tradenet. That's the broker that I use. Now, the challenge is basically within 5 trading days, you need to make $500. If you make $500, then you get access to a funded account of $14,000. It's a great opportunity to get a free account so you can start trading and making real money. Now, the bonus to it is if you go through the link, you sign up for it, just send me an email, and I would be more than happy to give you insight of different stocks that I might be trading for the day and what you should be looking out for. So just to help you out. Not saying I'm going to trade the account for you. That would be illegal. But I'd be more than happy to help. I don't get any type of compensation for it. It's a 5-day challenge. This is just a paper trading account. I don't get money from it. This is, again, just helping people. It's not for fame or glory or anything like that. It's really just to help people improve their lives, like I have, in this past year or so. If you enjoyed this video, please please leave a comment. If you want to subscribe, that's fine. I will have more material coming out, more videos. I do want to break down of what brokers are best to use. And of course, I'll be having live trading videos coming up as well. Again, this is Jonathan from Lone Wolf Day Trading. Stay green.